Welcome back from that particular break. Good evening and welcome to Business News right here on TV Africa. My name is Christopher Aticho. We're live on Go TV channel 175 and we also stream live for you also at Facebook at TV Africa News Show. Now let's settle for the details. And the Vice President, Dr. Muhamudu Bawumia, has justified reasons for the sharp U-turn to the International Monetary Fund, the IMF. He says Ghana has quadruple problems that are mainly caused by two external factors and two homegrown factors, that is the COVID-19 and Russia-Ukraine war, and also the financial banking cleanup exercise, as well as the energy cleanup exercise.
Global supply chains were disrupted and shipping costs increased by over 1,000%. Economic growth slowed down. Higher revenue projections in the 2022 budget based on tax exemptions, property rates, and the e-levy did not materialize. The debt sustainability analysis continued to place Ghana at a high risk of debt distress. There was a credit ratings downgrade by the international credit ratings agencies. In fact, ladies and gentlemen, before COVID-19, Ghana was borrowing some $3 billion annually from the international capital market. But following COVID-19, the international capital markets have been largely inaccessible by emerging market countries like Ghana. Furthermore, as a result of increases in interest rates in the developed economies and increased perceived risk of emerging market economies, investors have pulled $50 billion from emerging market bond funds just in this year, in 2022. 50 billion have been pulled. Non-resident holders of bonds in Ghana were not also rolling over maturities. In a decline in foreign exchange reserves also resulted. With the challenges in accessing the international capital market, balance of payment support was needed to bridge this financing gap, stabilize the economy, and create the space to implement structural reforms and restore debt sustainability. And this is really the reason why Ghana had to go to the IMF. I should again note that Ghana has been hit with a quadruple whammy. A quadruple whammy. The energy sector excess capacity payments, banking sector cleanup, COVID-19, and the Russia-Ukraine war. We have been hit by this quadruple whammy. And I say again that if you take out the fiscal impact of this quadruple whammy, Ghana will not be going to the IMF for support because our fiscal and debt and balance of payments outlook would be sustainable. Of the four factors, COVID-19 and the Russia-Ukraine war were external, and the other two, the banking sector cleanup and the excess capacity payments, were the result of policies of the previous government. Today, all over the world, fuel prices are rising in virtually every country. Food prices are rising, inflation is high, it's at a high for many years. Currencies are falling in value. Fiscal deficits are rising. Debt levels are increasing. This is happening globally. And this tells us that what we are dealing with is a global phenomenon.
Now, let's still stay a while longer at the headquarters of the Vice President, Dr. Muhamudu Bawumia, because he has hinted that Ghana will exit the International Monetary Fund, the IMF, stronger than the past 16 times it has visited the IMF. He says it is time the country stops relying on foreign capital markets and excess borrowing as it exposes the vulnerability of the Ghanaian economy. He also added that the central bank is implementing measures or policies to improve on her gold reserves, as it only has an 8.7 kilograms gold at the end of 2021. This, the Vice President says, is woefully inadequate. Hence, improving on the country's gold reserve at the central bank will improve on the country's currency.
Is to restore fiscal and debt sustainability, and these will be through revenue and expenditure measures and structural reforms. There's no way of going about that. We should also try and curtail non-concessional borrowing. That has to be curtailed. The reliance on international capital markets to fill the financing gap of about $3 billion annually exposed the vulnerability of the economy once the capital markets shut down to emerging markets. This has heightened the need for Ghana to build foreign exchange reserve buffers to cater for unanticipated shocks like COVID-19 and the Russia-Ukraine war. Ladies and gentlemen, notwithstanding that Ghana is one of the largest producers of gold in the world, and we have been so for almost 100 years, notwithstanding that, at the end, Ghana's reserves of gold at the central bank, we this largest producer of gold, notwithstanding that, Ghana's reserves of gold at the central bank at the end of 2021 was only 8.7 kilograms. That is our quantum of gold reserves. And it is against this background that the Bank of Ghana started a gold purchase program from gold producers to build up its foreign exchange reserves. To enhance this gold purchase program, government is implementing a new policy which is already backed by law. And under this new policy, the Bank of Ghana, the central bank, will have the first right of refusal for all gold mined in Ghana. We will have the first right of refusal. The law says if you mine gold, we can buy it off you. And so the central bank will have the first right of refusal, and the central bank will purchase the gold at world market prices, and the mining companies will export the portion that is not purchased by the central bank. This is a very, very important policy. Ultimately, once we accumulate enough gold, our future borrowing and our currency can be backed by gold. This will stabilize the cedi in the long term. We must also deepen our industrialization through value addition to gold. Even though Ghana has 2 gold refineries, none has the London Bullion Market Association certification, and this limits our full participation in the gold value chain. We will urgently work towards LBMA certification for our refineries in the next few years. Value addition to minerals such as lithium and bauxite will similarly be pursued, in addition to our 1D, 1F program and the implementation, continued implementation of the automotive sector policy. We are building, and we have to build, an industrial economy.
And on the note of improving the country's gold reserves as well as industrialization, this is where we draw curtains on today's edition of Business News. My name is Christopher Aticho. We're taking a breather. When we back, the news continues with Muhamudu Bawumia.